Hello, Naples seniors. Thank you for tuning in to the Naples Seniors Network, where you can find information, ideas, advice, resources, and support to live your golden years with a healthy lifestyle. My name is Conetka Perez, and I am realtor from Coldwell Banker. And we have our guest here, Laura.Sanchez, our Vice President from Guaranteed Rate Affinity. Hold on, I'm going to share the screen. Right there, Laura.Sanchez, and that's her contact information, my contact information, and today she's going to share about buying condos. So, so we know that as senior citizens, you know, like most senior citizens would have a big home and then they want to move to a smaller home to downsize. However, there's a difference with condos versus single family homes. So Laura, help us, enlighten us. What's the difference between purchasing a single family home and a condo?
Well, hi, Gonette, and it's so good to see you. I haven't seen you in forever with this craziness, so I'm glad to see your smiling face. Thank you for having me. I appreciate it. Absolutely, there's a big difference between buying a condo and buying a single family home. When you purchase a home, there are two things that a lender qualifies. They qualify you, the buyer, to make sure you have the income, the assets, and the credit to purchase the home. Then they also send out an appraiser, and they make sure that the appraised value is there, meaning the house is worth what you're buying it for, and also that it's in a good lendable condition. In other words, when the appraiser goes out there, he doesn't want to see a big hole in the roof, and he'll go, guess what? We can't lend on that house. So it's the condition of the home, the value of the home, and then the borrower. So when you have a condominium, there's actually 3 pieces that you have to get qualified, and if one of those 3 doesn't work, then you can't get a loan on it. So we still qualify the buyer to make sure they have the income, assets, and credit. And income could be even like if you're retired and have a big lump sum of assets and you draw from assets, that's still income. So income, assets, and credit worthiness to purchase the condo. The condo's condition itself, but there's also that HOA, the homeowner association. So it's almost like you're buying it with another entity with the HOA. So we have to approve as lenders that homeowner association. So what do we look for the homeowner association first and foremost? And the good thing about that is, you know, that we're also protecting you as the homeowner. So it's really good, honestly, to get a loan because there's so many things that we check that your average homeowner wouldn't check if they're purchasing it for cash. And I'll give you some examples of things that have failed and we've not been able to lend on. And you know, you'd never even think about it if you were buying a single family home. So we check all HOAs. So the HOA, when you purchase a condominium, you technically only own from the drywall in. And the HOA is also a homeowner. They own the exterior, anything outside the drywall, and they take care of the exterior, whatever. So there is 2 pieces parts. So just like you, they have to have insurance on the whole the master dwelling, the whole thing. And if it's in a flood zone, they have to have, we do have flood zones here in Florida, way more than where I came from. So they're going to check the insurances, you know, do they have enough coverage for the dwelling? Do they have flood insurance? And one loan that did fail for me was a condominium that opted to not have a master flood policy. So
can I, so what you're, well, what if I'm purchasing on the higher level? Do I still need flood insurance, or are you talking about the condo itself having the flood insurance, but the person buying the home, the buyer, does not necessarily have their own flood insurance? Can you clarify that?
Yeah, and it depends on how much, you know, what their flood policy and what they have looks like. But if that building, you know, you've got a high rise, whatever, that's 20 stories or something like that, and if they're in a flood zone, they have to have a master policy that regardless of what floor you're on, because they don't just own a piece of it, they insure the whole building. So
Okay.
they have to have flood insurance. And then the buyer's insurance, which is much smaller, it's a much smaller annual fee when you have, it's called an HO6, I think. I'm not an insurance agent, but the interior. So you insure from the drywall in. So your policy is small, and the master policy for the building is big. So just be aware that insurances have to be, up to par for both you and the building. So that's one really important feature, because, imagine if they did have something go wrong, with the building, you would lose everything. So that can't happen. So that's one big thing, is we check their insurances. The other thing that we check is their budgets. So when you have a homeowner association, you have a lot of money. You collect your HOA fee, and there's a lot of money that they collect to do all the things that they need to do. HOAs also need to have reserves, meaning money left over. And the rule of thumb is they have to have 10% reserves. So, if they have $100,000 in their budget, and that's what they budget for spending for the year, they also have to have a reserve bucket with at least 10,000 in it. So we look at their reserves. There might be some exceptions to that, but for, just rule of thumb, you don't want them to run out of money and then they can't fix roofs and whatever. So again, that protects the homeowner so that they have money if something does happen and all their money is spent, and something like Irma happens or whatever, and insurance doesn't cover. You never know. So so the reserves are also very, very important with a condominium. And the last thing that we check, not last thing, but another thing that we always check that's very important, it's called it's fidelity bond. And you can think of it as theft insurance, because if you can imagine, some of these homeowner associations in Florida can have millions of dollars in them. And, not that, we know anybody that would do this, but imagine someone's, in charge of that budget, $1 million, and they just decide, hey, I'm tired of living in Southwest Florida. I want to go buy my own little island. I'm taking this money and running. So they also have to have that fidelity bond insurance, and that protects you from someone running away with all your money, which is entirely possible. And you can't, can you imagine if they did that? So these are all things that we check. These are the big three that I think of that make, so much of a difference with a condominium versus a single family home. So
What about like pending lawsuits or rental occupants
sure.
does that affect your lending policies or?
Yeah, it can. It depends on your occupancy. Occupancy meaning, are you buying this as your primary residence? Are you buying this as a second home? Or are you buying it as an investment property? So there are different guidelines depending on what your occupancy is. The guidelines are the most lax if you're buying it as a primary residence. They don't care as much how many are investment properties, or, we don't want pending lawsuits for sure. But as far as the rest of it, there's variations. If you are purchasing it as an investment property, they do care about how many units in there are owned by an investor, or one investor in particular. We don't want one person to own the majority of the units in there, because then they control the unit. The HOA doesn't control the unit. So and that can really affect the values of a condominium. So we want to protect your value. We want to protect your property itself, and we want you to be in a safe environment. So it's that's why, everything that we do is to protect the purchaser. And we're buying it together, so we're lending the money. Not that we own the property, you have the deed, but it's an investment. We're making an investment in you, you're making an investment in us. We want to hold hands, sing kumbaya, and have it be a good experience for everybody. So that's why they do that.
So that's great, like even if for people that have the cash, but at least, like you said, you offer the security because you check everything when you're
Right.
doing
Right.
it.
And don't forget, all of that will affect your ability to sell. So let's just flip the coin and say you didn't check all those things. You buy it for cash. They don't have flood insurance, and you never even thought about it. Said, oh, that's no big deal. Well, I want to go sell the property. Well, now you have to find a buyer that can also pay cash,
Mhm.
which, so that's going to what, limit your buyer pool by half probably, right?
Mhm.
You know, I mean, half the people pay cash and half, you know, get a loan. So you're, you know, you just wiped out half of your potential buyer pool. And I don't think as a realtor, you would want someone to do that, right? It's like, oh, great, you
Yeah.
know. And like you wouldn't
Okay.
advise them to paint it, you know, the interior black. Don't paint the interior black. You probably won't find as many buyers.
Mm. Yeah, that's great information. Thank you so much, Laura. So just to recap, this is how you can contact um, Laura and of course myself if you are thinking of buying a condo. Call her at 239-895-0657 or myself 777-3287. Thank you.
Perfect.
So I'll probably ask you for more, you know, because that is great information she shared us. Any last words that you want?
No, I mean, you can ask as many questions or as few questions as you like, but you know, it's a big topic, and I don't even know what, you may know how many percentage of units that we have here in Florida, but I'm going to guess that, you know, once you calculate how many, you know, floors and levels and buildings, I would venture to guess we have more condo units than single family homes here in Southwest Florida. I could be wrong, but
Yeah.
there's quite a bit. So it's a big
So
part of people's lives here.
if you have any questions about lending, borrowing, just call Laura. Okay.
Thank you. All right. Bye, Gannett.